Good morning, my name is Karen Jones and I'm the content editor for the Society of Technical Analysts. And today we're going to revisit the S&P 500 chart following its rejection from its 200-day moving average last week. We've discussed this recently quite a lot. We discussed the fact that we thought this entire rally up to the 200-day moving average was likely to be a bear market rally, and in fact a correction only. We discussed that it was likely to fail in and around the 200-day moving average, and we then discussed in a later video that should it break below the base of this Andrews pitchfork and the previous high back in the middle, back at the beginning of June at 4177, that this would be a negative price action. And this is exactly what we've seen. So what are we looking at now? So our first support level of note is going to be the 55-day moving average, and that comes in at 3981. That's this moving average here. And yes, we're going to have minor levels offered by the end of June high there at 3945. And let's not forget the low that we saw in June at 3637. The critical support is the thing I'm more interested in. And for that, we need to look at the long-term weekly chart. So what is going on the weekly chart? As we can see here, we've failed recently, not only at the 200-day moving average, but also at the 55-week moving average. And for us, the critical factor on this chart longer term is going to be this 200-week moving average. Now, this currently is at 3562. Why is this important to us? The reason it's so important to us is simply because the price action that we've seen previously around this 200-week moving average. Please note that in December 2018, we sold off to and bounced straight off this 200-week moving average. And we also did it back in February 2016. In fact, the only time that we actually saw any breach of the 200-week moving average was a brief period of time back in March 2020. Most of the time, this has worked as a superb floor for the market. So what does this actually mean technically for us? Should we see the market go down and test this moving average and hold, it suggests that the underlying long-term bull move is still intact. Should we see the market fail here, fail at the 200-week moving average and start to break below here with some determination, it would suggest the entire bull move that goes back for quite some time is in fact over. Now, please look down at the weekly DMI here. We've gone down and tested and found support at the blue line here, and the orange line is starting to turn up. Why is that important? It's because it's the minus DI line, and we suspect it is offering an additional sell signal on this chart. So one more time, the most important factor for us on this chart is going to be the price action around the 200-week moving average. This is going to be critical, we suspect, for the long-term trend. Thank you.